Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100. And Chris, as we head into the bell here, slightly lower on the day for the Nasdaq-100.
It's rallying back a little bit here, actually. We opened higher. It was a nice start to the morning, kind of unexpected, right? Because we were really unsure what coming out of what happened last week with the Fed and the inflation and a number of other items that keep getting discussed. But earnings have been strong. But when you see yields rising on the 10-year, it's usually negative for tech stocks on the valuation basis. And that started to creep back in at midpoint. Right now, the index is only off about 8 points. We opened at 15,894. We're trading relatively close to that. We did a high of 15,918. We're trading at 15,851 right now. Now, it'd be nice to see the index close above where we opened today, but I'll take a flat on the day as well.
All right, Chris, if we pull up your first chart here on Bloomberg, let's take a look at some fresh technical levels to watch in the Nasdaq-100.
Yep. So the index closed at a new all-time high last Monday, 15,982. We've been kind of pinging up next to that all week. The index has had a nice run. This is the first time in 9 weeks that the index has closed lower week over week. You got to go back to early September for that. So it's been a nice, significant run. All you have to do is look at the chart from September all the way through to see that. Interesting to note, we did have, and I talk about it quite often, relative strength index, RSI. The RSI hit above 70 for multiple days at the beginning of the week when we made those new highs, and has since sold off as expected. Now, granted, you had macro news that kind of played into this, but when you have that overbought condition, remember, RSI measures numbers from 0 to 100, with 30 being oversold and a 70 being overbought. And when you're seeing a 70 overbought, it's telling you that the buying momentum is coming to a close, and that's what happened. The index did sell back off. What's interesting, the index is now rallying back up since the last 4 days, and the RSI is now sitting at about a 64 handle, which means it still has room to run.
All right, and Chris, here in our next chart, we can take a look at the individual constituents attributing to performance.
Yep, it's a nice split between up and down in the index. What you kind of interesting here is that a lot of the points that are coming off of it are really off of newsy stocks right now, right? Tesla is trimming about 13 points, Nvidia's about 12, but Facebook and Amazon are acting very well, kind of offsetting that. There's some news out in a number of other companies, such as Dollar Tree, that's up 14% today, adding almost 4 points. So a good mix. You've got about 55 companies down with 45 companies up.
All right, Chris, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.